In this video lesson, I would like to explain to you what is a false breakout. Whenever the price tries to move in one direction, but then it was failed and then returns back in the opposite direction and continues to move in that. So in this case, I would like to show you on a 1 hour time frame, which is with the gold against the US dollar. It will be 1 hour time frame where you can see that I have already set these horizontal lines, which represents the support and resistance levels on a 1 hour time frame. These small dotted lines are on 1 hour time frame. These bigger lines are on a 4 hour time frame, and the full line, which is here and here, are daily, weekly and the monthly. I will start from this area here and to the right side. So we will move forward and I will explain to you where are the false breakouts and how to spot them, so you understand when to expect that the price will not move in the direction of the breakout, but it will be returned back in the opposite direction. So this is the time when you can expect for sure that the price will move in the opposite direction and then catch the move to go in line and ride the trend. First of all, the false breakouts happens whenever the market strives to make a breakout in any direction. Then the price goes in one of the directions and then the price fails to reach the target in that direction, and then the price returns back down. I will use one example so you can understand what is a false breakout, so you can follow further on easily, so you understand what I mean. Now, in this case, for example, let's take an example from here. Here it is. Now, the breakout. First of all, you need to understand what is a breakout and when it happens. So when you take a look here, the price from here goes to the upper side. Whenever the price reaches this one here or this one here, it is a resistance for the price. So the price needs to make a breakout above this area, which is a resistance, to continue to moving in this direction. For this, the price needs to make a clean breakout. If you take a look a little bit back in the past, you will see that the price is trying to make a bullish breakout above this resistance, but this one was failed. Then the price continues to try another bullish breakout, but it's failed. The price cannot make close this candle, a bullish candle above that. The price forms a wick on the upper side, but we need to have a clean candle body closing above this area, above this resistance, that will be verified as a bullish breakout. And then on the fourth attempt, this was the first, this was the second, this was the third, and on the fourth attempt we can see a bullish candle that has been formed with a candle closing above this horizontal resistance line, and it is also above these candle open and close, open and close. You can see that the topest price for these candles before was here, but the price managed to close above. So the price creates a breakout, which means the price is trying to move in this direction. And in this case, we can see that the price with the second candle after that has continued to rise in value and reached the second resistance. So this was the target, and the target has been reached. Then after that, the price needs to make a clean breakout above this resistance, and in this case we can see that the price has managed to create a bullish breakout where the price continued to rise in value to the next resistance. This was also clean breakout, bullish breakout, and the price stopped right here at the next resistance. Then the price jumping back and down, and finally the price found again bullish breakout where the price has reached the next resistance, which is the next target. Then the price has gone down, then go up. We can see below the support here was also a bearish breakout, then the price tried to move down. Now in this case we can see after the price has reached this resistance level, the price bouncing back down, and to continue to move even more down, the price needs to make a breakout, which is a bearish breakout below this support. In this case, this candle has created the bearish breakout here, and then the price can also try to move even more down, reach it very close to the start of this demand zone. A demand zone is an area around the support level. The demand zone represents where the buyers are. So the price reached almost very close to this one and then returned back up. Continue also creating another bullish breakout where the price has continued to try to move up, but there is a large wick here where the price already reached this start of this demand zone. Then the price continued to rise in value, where the price has been for a while above this resistance. The price was trying to make a bearish breakout. We can see several times the price trying to make a bearish breakout below that. Then the price returned back up, continued to reach this area, which is the resistance, and the price formed this strong bearish candle. This bearish candle has gone below these open and close price levels, where we can see that the price has found and created a bearish breakout below this one. So it was expected that the price will continue to move in this direction, but the price has returned back up, creating a failed bearish breakout here, where the price returned back up, where the price was expected to continue to move in the opposite direction. So in this case, we can see this was a bearish breakout which was created, but then the next candle has returned back up, back above this, currently at that time acting as a resistance. So it was expected that this was failed and the price would continue to rise in the opposite direction. But the next candle was also a bearish candle that has created a failed this bullish breakout, where it was expected that the price will continue to fall down, and this is something that has happened. Now we can see that in this case we had the bearish breakout which has been failed because of this bullish candle written above this resistance, and then the second candle after that has created this bullish breakout as a failed one, where the price has returned back down below the support. So this was indication that the price will move down. So in this case we have a bearish breakout and we have a bullish breakout and then we have a bearish breakout. This something is a scenario that can happen on the market where you have several breakouts failed, one after each another. And this is something that you need to pay attention to and create a pretty good risk management to prevent losing money on these cases. This is something that happens, but it is very rarely, not too much and not too often. Now, after that, the price continues to move down and here creates a bearish breakout where the price continues to move in the direction of the breakout and reach the first support level, and that is here. Now we can see that the price was trying to make a breakout to the downside, but it was unsuccessful. In this case, the price tried to make a bullish breakout where the price has formed a bullish breakout right here, where the price has closed above this resistance. And the next candle has returned back down, which means the price has created this failed bullish breakout, which was indication that the price will not continue to rise in value. In this case, the price after this bullish breakout has been created, the price has reached the next target, which is the next resistance. So this would be as a successful bullish breakout because the price has reached this one. Now we come very close to this one area where I have said I will explain to you what is a false breakout. Now you understand, based on this one, what I have explained to you, what is a breakout. A breakout when the price moves above this resistance, which creates a bullish breakout. When the price moves down below the support, it is a bearish breakout, like in this example. The rule is always that the candle body needs to close below this currently support and below the previous open and close of these prices, because if the candle closes like in this example, this is information that the market has created a clean breakout where the price has managed to move down below very critical support level where the price in the past could not move down. So this is a signal that the market is trying to move in that direction with a larger strength than before. In this case, the sellers were enough strong to push the price down, close the candle and push the price all the way to the first support level. In this case, where we can see here the market has created a bearish breakout. We can see a pretty clean, strong bearish candle that has been closed right at the next target. So in this case, this would not be a very good opportunity to trade because the price has created a clean breakout and it has reached the next target. In the next candle, we can see that the price has reversed all the way back up above this resistance, and then the price reached also the target. After that, the price tried to make a bullish breakout above this resistance level, which in the past the price was also trying. In this case, we can see a small candle that has the prices format on the chart, where it was a bullish breakout, indication that the price will continue to rise in value and reach the target, which will be the start or this resistance level. The start is this supply zone. Now the next, to be a bullish breakout, it is always good to wait the next candle to close, and the close should be above this resistance level, now acting as a support, which means the price should not return back down in order to validate this bullish breakout as a valid one. Now we can see that the price in this case has returned back down, and the price has closed very close to this one support level. And if we go in the past, we can see that very critical level for the breakout was here based on these candles where we had a this bearish breakout. So the price has returned back down, we can see, and it has invalidated this bullish breakout. When this bullish breakout was invalidated, we can immediately conclude that this is a false breakout, which means the price will move in the opposite direction compared to the bullish breakout, which means the price will go down. And in this example, the price has gone down, closing and reaching the first target, which is the start of this demand zone, the next support. So this was a very clean, a false breakout based on the analysis, and it is a very clean sample, an example that we can learn from it. Now if we move forward and we take into account this one, what is a false breakout, you will see that there are many false breakouts which will help you to trade. Now let's move forward. Then in this example, the price will try to make a bearish breakout. This has happened with this candle, and we can see that the price has made a second bearish breakout. The first one was here. The price has gone below this one, it has closed below this support, the target has been reached because the next support has been reached, and then the price tries to make a breakout to the downside. We can see where the price has closed this candle body below this support. Now the next candle needs to be closed below this support level, which means the candle should not return back above. In this case, we can see that the candle did not come very close to this, did not come and close above this resistance level. It has come, so this would be some kind of a successful bearish breakout. But sometimes also bearish breakouts and can be failed, and in this case we can see that the price is moving in the opposite direction. So this would be a failed bearish breakout, even though the price has confirmed this bearish breakout as a valid one based on the criteria I have just explained. So there is now 100% bulletproof breakouts on the market, so you need to pay attention to this and use a proper risk management. Now let's turn back down. Let's turn back to the chart. We can see that the price has reached this resistance level, created a bullish breakout as a valid one. We can see that the price has gone above, closed the candle above this resistance, and the second candle did not return back down. So this bullish breakout has been validated with the second candle, and after that we see that the price has reached the target. As soon as the price reached the target, the breakout should not be watched anymore. So you cannot expect that the price will continue to reach again upside. For that you need again a breakout. Now in this case we can see the price has formed another bearish breakout where the price has gone down, closed below the support, and it has reached immediately the target. So we skip this one. Then we have a second candle that is making a bullish breakout where the price has gone up and reached the target. So we skip also this one. We cannot trade this one because we were waiting for the price to make a breakout and then wait for the second candle to validate this one. So this one is already reached with the take profits, so we skip this one, follow the next one. Now we can see we have a clean bullish breakout from this area. The price has gone above this resistance level, and we can see that the price has closed the candle. The candle body has closed above, which represents a clean bullish breakout. Now to validate this bullish breakout, where the price should come here and not closing below this support level, this would validate this bullish breakout. But what happens? A false breakout has been formed because the next candle has returned the price down, closing below this support level, which means the traders who have pushed the price above this resistance level could not manage to find enough strength to push the price even higher to reach the target, but after that immediately the sellers have entered into the market, cancelled this breakout above this resistance and created a bearish breakout, which usually means the move in the opposite direction compared to this bullish breakout. So you can see immediately the price tried to move in the opposite direction and it has successfully reached the target profit, which is the next support level. Immediately after that, we can see what has happened. The price has formed this small bearish breakout where the price has reached the next target easily. Now if you move further on, we can see what happens. Then the price needs to make a breakout below this one or this one. In this case, the bullish breakout has been formed and the price continued to rise in value, validating this bullish breakout as a valid one. The price has reached this resistance level. After that, the price needs to make a breakout above this resistance or below the support and created this one, a bearish breakout, which has already reached the target. So in this case, we need to watch how the price will create a bullish or bearish breakout below this one or above this one. Let's move forward. As we move forward, we can see that the price created here a bullish breakout where the price has continued to rise in value, creating another bullish breakout, then continue to rise in value, and so on and so on. So if we move forward, in this case, there is only a bullish trend. Whenever the price comes between this resistance and support level, like in this example here, we can see how the price jumps and we need to wait until the price makes a clean breakout. In this case, we can see that the price was trying to make a breakout below this price level. We can see that here. And finally, the price managed to create a bearish breakout where the price reached the next target. Then the price moved down and then reached this one support level where the price needed to make a clean breakout. But it has also created a bullish breakout right here. We can see that with a bullish candle where the price has reached this one level. It has closed the candle above this resistance. But the second candle has cancelled this bullish breakout and created a failed bullish breakout where the price continued to fall in the opposite direction. Now if you move forward and watch these breakouts, you will see how this pattern repeats itself. Remember, it is not 100% bulletproof. There will be cases when there is a false bullish breakout and the price do not go in the opposite direction, returns back up. This is also possible. Now, for example, let's take a look on the daily time frame. I would like to show you this one where we have a clean false breakout. In this example, we can see that the price was trying to move outside of this area. And finally, the price formed this bullish breakout above this resistance level, and we can see that the price has reached the first profit target. That was great, but with the second candle we can see that the price has cancelled this bullish breakout as a valid, and it has created as a failed bullish breakout with this candle. The candle has gone up below all these support levels where the price could not make a clean breakout, but with this candle, or this was also a Friday, the price has gone below one support, second support, and below the third support. So you can see what creates a failed bullish breakout in this case. Now if we go back in this example with the daily time frame, you will see also an examples of successful and failed bullish or bearish breakouts. For example, let's take a look, is there any of these? Let's start from here. We can see here the price formed a bearish breakout, which was confirmed with the second candle. The price has reached the target. Then the price tries to make a bearish breakout below the support. Then the price returned back above, created a failed bearish breakout where the price moved in the opposite direction. Now the price was up, trying to create a bullish breakout. This was successful because the price has gone above, but it has reached the second target, and it was successful. Then the price was going down. This was a bearish breakout, a successful one. Then here we have a bullish breakout, which is a successful one. Then we have here, and in this case we can see a failed bullish breakout. Why? Because we have a candle, a bullish candle that has created bullish breakout where the candle has closed above, but the second candle has returned back down, closing the candle body below this support level, which was creating a failed bullish breakout, and the price has gone in the opposite direction. Now in this example we can see another one. This was a bearish breakout to the downside where the price has closed below this support level here. Second candle has returned above, which has created this one as a failed bearish where the price has gone in the opposite direction. We can see that after a while the price has reached the target right here. Then we have here another failed bullish breakout where the price has gone above this resistance level but could not manage to close the second candle above, could not reach the target. And then the price has created the second candle below this support level and reached the target. If you follow this scenario, you will see how many failed breakouts you have, but you will see also how many successful breakouts you have. But the idea is for the false breakout, the second candle after the breakout happens should be closed below support on the resistance, which will indicate the move in the opposite direction, opposite compared to the breakout direction. Now this is all for this lesson. If you have any questions, feel free to comment. I will try to explain as much as I can, but you get the idea what is a false breakout and how to trade it. Whenever this false breakout happens, most of the time the price goes in the opposite direction compared to the breakout. If this bullish breakout, failed bullish breakout will trigger move in the opposite direction, which means the price will move down. If you like this video, click the like button and subscribe. See you next time and happy trading.